let's talk about bonds, okay? So we know the bonds market. Oh, Euro bond, oh, green bond, oh, what bond, oh, but there's something called a gender bond. Did you know about the gender bond, CT?
I'm hearing about it for the first time.
Gender bond. Many people will be hearing about the gender bond for the first time. Those who have heard about the gender bond probably know something or two about the gender bond, and there are many who may not know. Understanding gender bonds and their benefits to Kenyans. Daniel Wilcox is the UK's economic counsellor at the British High Commission in the country, and Mary Njuguna, principal specialist for capital markets at FSD Africa. Mary and Daniel, good morning.
Good morning.
Welcome to Kenya's biggest conversation. That's a hot seats of the Situation Room. Karibuni sana. How does it feel, Mary?
It's good so far.
Good so far. Daniel, does it feel comfortable?
It feels a bit hot. No,
it's easy. You are here to tell us all about the gender bonds and what they're all about. But then, CT will welcome you with the day's proverb. Every week, CT goes to one African country. And then he mines proverbs from that country. He gives us a proverb a day from that country. And the job of our guests is to listen to the proverb and give us your own interpretation of it. There's nothing like a right or wrong interpretation. It's your interpretation of the proverb. This week, City, where are we?
We're in the Seychelles.
The Seychelles.
The island country of Seychelles.
Okay.
One of the smallest countries on the planet. Yes, but nonetheless, a republic and an independent country.
Allah?
Oh, yes.
And the population, again, you said is?
It's in the regions of 100,000 plus. They're not many. They're not many at all.
No, that's not many at all.
Yes.
It's an estate in Nairobi.
Now the proverb.
Yes.
A dog that lives on the bank of a brook. No, we said no brook here in Kenya.
No bank, no nothing.
No bank. Okay. A dog that lives by a river. That's better?
Yes.
Okay. You know, these guys are going to be upset with me. That's not what they said, but let's do it. Okay. Never tires of lapping in the water.
A dog that lives by the river never tires of lapping in the water.
Yes.
What's your interpretation of this? Start with you, Mary.
Well, for me, I think what I take away from that is that the dog represents, anyone. It could be you and I. Wherever we are in our circumstances, we need to take advantage of the opportunities that exist in that scenario. So that's how I look at it. The dog is taking advantage of the water. It's not tired of lapping the water. It's not burdensome. So that's what I take away from that. But in my circumstances, in our circumstances, there's always an opportunity to take advantage of, and we shouldn't be tired of that. Interesting.
Daniel, what's yours?
Well, I'd say, water is a pretty fundamental need in life, and having a source of it like that, you're going to need it constantly. So I think there's the being able to take advantage and just have that opportunity to have something that's actually needed in you. So it's not just it's an actual necessity. So yeah.
Well, it's a resource that's available because if the dog didn't live near the water, this activity it's involved in would not have been that easy. So again, you're right. There are resources that are usually at your beck and call, but what you do with it is really up to you. Yes.
That's an interesting one and a good one. What's FSD Africa, Mary?
So FSD Africa is a specialist development agency. We are funded by UK Aid. We were set up in 2012. And what we do, we say our mandate is to make finance work for Africa's sustainable future. What that means really is that Africa has many sustainable development needs, as we know. And the financial markets, we recognize that there are certain challenges that exist in the financial markets which make it difficult for capital to flow to fund these sustainable development needs. So that's a big picture kind of explanation. But what that means for us on a day-to-day basis is that we identify those challenges across the financial market. So our market is, of course, comprised of very many components. And in all those components, there may be certain challenges in the regulatory framework, the policy environment. When it comes to the products that need to be traded on that market, they may not be trading effectively. So we identify what are those challenges, and working with policymakers, regulators, private sector players, and even investors, identify, interventions that may help to unlock those challenges, whatever they may be. And I'm sure as we get into the discussion, I'll be able to get into some of that detail.
Is it to the benefit of the Africans or to the benefit of your benefactor, the UK government?
It's for the benefit of the Africans, definitely.
Why does the UK government have to finance people to look at how to help Africans do their own thing?
Well, I would answer that. I mean, Daniel is here. I know he'll answer part of that question. But what I can say as an African financial sector specialist on the continent, in fact, for us, we are a team that is comprised of various financial sector experts across different markets. So we have our hands and feet on the ground. We understand the markets. And we work with market players to get a solution that is context-specific and very tailored to the markets that we're working in. It's really, you can't get a solution that has come from another place and fix it in the country.
Yeah.
So you need to understand the context, you need to understand what the challenges are. And we really are focused on understanding the challenge to be able to work with the market players to be able to resolve some of those challenges. And so what I would say is that we get funding from the UK, definitely. But in terms of how we work, it's we consider ourselves very boots on the ground. We understand the markets and we try to find solutions that are beneficial to the markets that we work in.
You know me, I'm always fascinated by financial talks because half the time I don't understand what they're talking about. But now that we have experts here, I am going to seek to understand this thing better. Okay. There's this organization set up to understand needs that the inhabitants of this continent may have and how best that financial need can be met. There's funding from the UK to do this. Okay, so that I understand it. Give an example of a place and how this sort of understanding, coupled with this funding, has interfaced and what it looks like, where it's nestled, and how it's playing out in the here and now.
Okay, a good question. So, very practical example. One of the parts of a market, a financial market, is the regulatory environment. And we know that the regulatory environment needs to work effectively for players to feel comfortable to play in that market, to sell their what they sell as products in terms of financial products, right? So when, for example, we have identified in many markets, and I'll give one example. Let me just, for argument's sake, let me use Nigeria. In many markets, we did an assessment to identify the capacity of regulators to be able to regulate their markets. Are they doing it effectively? Are there gaps? So that included many countries, including Kenya, but I want to use the Nigerian example. In Nigeria, we identified, they shared various challenges that they have in being able to effectively regulate the market as robustly as they need to. And one of those areas that needed to be strengthened is on the human capital side. You know, just strengthening their human capacity, their the digital capacity, because one thing about regulation, it is a very capital intense, both in terms of human capital, but also in terms of IT. So having identified that challenge, part of our funding went to do that assessment, but part of our funding also went to help them resolve some of those challenges. That included a lot of HR transformation work that was done. So they found that they have a very heavy regulator and maybe some resources were not needed. They were able to really go through a process of early retirement of some of their staff, which was done voluntarily, reskilling, and a whole new HR framework, capacity framework that was developed. But that also is coupled with their IT capacity, which was also developed in terms of their strategy that they need to pursue and bringing on board the kind of systems that they need, and that's already ongoing in terms of getting that on board. And it's a long-term piece of work in terms of when you look at regulatory work, it's a long-term piece of work. That's one example. So I'm giving that as an example to just add some color to what I said. And I hope that helps.
Okay, so given what we're discussing today, I make it from a description or definition point of view. So what are gender bonds?
So let me take one step back, because I'm aware that not everyone may know what a bond is. So a bond is long-term borrowing. And long-term here, we are talking about anything above 2 years borrowing by a company or even a country to finance certain objectives. And who invests in a bond. It may be you and I, or banks, or insurance companies, or foreign investors, DFIs. They invest in bonds because they have the capital to deploy. But as an entity that is raising that is issuing the bond, they have to tell us as investors, what are they raising the money for? They will need to tell us, we need to know who is this company, how is it governed, what are the risks of operating in that sector, how is that sector doing? So that's like their contract to us. That's what they are selling. They are telling us who are they and why should we invest. They tell us what rate of return we should expect periodically. So that's a bond. And usually bonds, I think the important thing to say about bonds is that typically a typical bond may not necessarily tell you in detail how they will spend the money. They may just say that it will be for general purposes, right? Now, a gender bond is a bond that actually tells you that how we will spend this money is in financing gender empowerment objectives. And I can give you examples. So you may have a bank or a financial institution that raises capital, and it tells you as an investor that we will use this money to lend to women-owned and women-led enterprises, for example. Because they have that as part of their business model. They have a women banking line, and they want to use this money specifically for that. And let me also just bust one myth. It doesn't mean that all the funding that goes to, all the funding that comes through a gender bond only goes to women. It may actually be channeled to a company that may be owned by men, but generates products or services that actually benefit women.
Okay. So, Daniel, how have we seen that bonds, as has been described, how have these particular bonds benefited that we've seen that have been in operation before? How have they benefited and then essentially would give hope to say this is something we can continue to invest in because we've seen the benefit of it?
Well, gender bonds are relatively new kind of instrument. You'd have heard of kind of climate bonds and green bonds beforehand. I just wanted to, if I can take maybe 1 minute to take a bit of a step back, because I think the need for bonds in general, or impact bonds, gender bonds and climate bonds, I think there's kind of 4 areas I just want to pick up on. One is there's real development need for this. So the climate ones are really straightforward. When it's CO2 emissions, we need to kind of curb that. We need to get populations that are resilient to climate change. But then you can see it across other development impact indicators, and also within the gender specifically, equality is hugely important. There's a statistic that I just wanted to raise, Kenya specific, that during COVID-19, 50% of women lost their jobs. We need to get those women back into those jobs. And so there's a real development need on that. So there are development issues that need to be tackled. There's a funding need. So the Sustainable Development Goals, which you may or may not know, but these are a range of goals that, basically the globe has signed up to deliver by 2030. From now until 2030, so over the next 6 years, we need another $15 trillion worth in order to meet those Sustainable Development Goals. I think the OECD estimates we need roughly $3.9 trillion annually to meet that. Those big numbers, they're not coming out of the public purse, they need to come out of the private sector. And the good thing is investors are seeking those opportunities. So there are impact investors. There are certain type of investors out there that specifically been mandated by their shareholders or their funders that want to go and seek it out. So there's this thing called 2X Challenge, which the UK helped launch in 2018, which had a goal for gender investing. It had a goal for 3 billion between 2018 and 2020, and it's now mobilized 27 billion. So there's money out there. So there's funding needs and there's money that's looking for opportunity. And this is where a gender bond that can say, here's the bond bit where you can come in, and here's the gender where the impact, and we can kind of show it. And the role of FSDA in this is really providing that framework for investors. And I suppose to your question about the UK's kind of role in this and how we fund FSDA, which is an interesting kind of structure. So I think we've got maybe two, specifically within gender bonds or within bonds generally, two kind of areas that we can support. One is, London is a financial hub. We do have expertise in London on how to deepen capital markets. And that's kind of a structure here. So we can structure bonds and we've got the expertise there. But over the past 10, 15, 20, 30 years, we've kind of developed a toolkit of instruments, FSDA being one of them. We've got others like Garantco that can provide guarantees, British International Investment that was funded 70 years ago that can invest in these bonds directly. So we've got a toolkit that we've funded, but the toolkit is very specific, context specific. So I like Mary's interpretation. We do bring the money to a certain extent, and then the expertise is very much the delivery partner.
Okay.
So I think that bond and gender. So I think we've seen in the climate space kind of the real value in this. So there's been, and Mary will be able to give such specific granular detail on specific projects. But you can, renewable energy now has been, the investment going into those spaces is huge. That needed to happen through kind of de-risking the whole sector and being able to show a proof of concept that you can invest in these places and these kind of instruments, and they will pay off. And that's the journey that we're going on with gender bonds now, and why this framework that FSDA have developed is kind of so valuable.
Is there anything that's specific to a gender bond that would be different from the green bond, from any other bond, an infrastructure bond, any other bond in the market, that then says, because I'm floating a gender bond, I'm going to get some favorable reviews from the market or treatment by the market because I'm floating a gender bond and not any other bond?
I'll let Mary, but I just want to say one point on this is to say, I suppose from the private sector, we're not doing a favour for the private, or asking for a favour from the private sector. This is a commercial bond, and I think the private sector would be seeking out gender opportunities because we've got statistics that non-performing loans, so loans that get defaulted, are lower in female businesses than they are in male, and generally, so they perform better. Also, a diverse gender portfolio will perform better. So it's kind of economically viable for the private sector to be seeking these out. And I don't know if you want to kind of pick up on any of the specifics, but I think there's this idea that we're just trying to kind of force a market share. We are trying to kind of make a route for the private sector that wants to get involved. And I think that's exactly what the framework's trying to do.
Yeah, and I think just to add to that, so for an issuer of a gender bond, I mean, at the end of the day, you are selling a product to an investor. They will, of course, be looking at many things. They are looking at the return, not just the return, but also there's a reason why they have decided to put their money in a gender bond that has specifically said, of course, the issuer has specifically said that they are investing in certain impact objectives as opposed to any other bond. That is attractive to several types of investors. And that's what we've seen in some of the, like I can mention one of the bond issuances that we've supported in Tanzania. That is NMB Bank. It's one of the large banks in Tanzania. So they issued a bond in 2022. And one of the takeaways actually from that particular issuance is that they find that there are many issuers, many investors, impact investors, international investors, and even some within the region who are interested in putting their money in that kind of an instrument because they know where the money is going and they are aligned to those social impact objectives, for example. And when you look at the overall impact that comes out of that kind of a bond, I mean, one of the objectives, or it's actually a requirement for issuers of these bonds, is that they are meant to actually disclose how those funds have been applied. So there's an added level of, should I say, transparency and accountability to your investors, which is a good thing, I think, and it's a very strong signal of your commitment as a entity that is issuing these bonds to actually meet certain social or even green objectives for green bonds, for example. And what is happening is that there's capital that is actually keen to invest in those. And what we've seen, like for example, with that bank, they've gone to the market again late last year to issue another bond as well, and a sustainability bond with both gender and green outcome objectives.
Right.
So I would say that...
And they've been successful both times.
They've been oversubscribed, meaning there's
both
demand.
Times.
Yes.
Okay.
And what is interesting with the Tanzanian issuance, what we've been seeing in that market is that actually retail investors have also been very keen to invest in those kind of bonds. Usually, it's institutional investors, the large pension funds or banks, insurance companies that invest. But there actually we found that, the majority of the investors were retail investors. More than half of them were women. So that also has its own inclusion story. and that's quite impactful as well.
So, Mary, you've just said, let's gender bond. You're issuing a bond in the market and you're saying, I am going to take the proceeds of this bond to go and put in either women-led and women-owned businesses or businesses that have an impact on women. Maybe they have employed women or they're producing products and services that will greatly benefit women.
Correct.
That talks about almost everything. I mean, if you just think about it, all I need to do is come to the market and say, I can show how women are going to be impacted. So I'm in the agribusiness, agri-processing, women are farmers. I'm in this, women are producing goods and services. I'm in this, women are consumers of these goods and services. I have employed women in my company. And if I can just show that I have one extra woman than men, then I have more than 50% of women employed in my company, I'll sit favorably and get this bond. It's like a buzzword.
What I can say to that is it's not that easy. I think I've tried to explain it as simply as I can. There are very many intricacies because you can't just bring a bond and call it a gender bond. And for sure, you're right. I mean, everything has an impact on one gender or the other. What I can say is when you look at the process of issuing this bond, it's a very rigorous process. You can't label it a gender bond unless a third party has actually checked what metrics you're using and confirmed that indeed this qualifies, because it's not enough to be tokenistic. You need to be really, even those products, they have to be really, they should disproportionately benefit women in the sense that there should be some significant impact to women, for example. And we're saying women not because women is gender, but in this particular, in our context, in our social construct, we know that when we're talking about access to finance, for example, it's women-owned and led businesses that have challenges accessing finance, for example. But that's not to say that gender equals women.
Sure.
But that's what I would say to that, just to let you know that it's a very rigorous process. So you can't even come and say that if you own a company with your daughter and your wife and you have 80% and they're also there, that is a women-led and owned business. It's not. There's a certain threshold. So it's about 50%. When you talk about women in the workforce, it has to be at least between 30 and 50. As a minimum
to be
considered. So there are certain thresholds, because you're right, I mean, anyone can say anything. So it's a very rigorous process technically that goes into allowing one to say it's a gender bond.
When you look at impact, it was one of the things that you mentioned. Fortunately or unfortunately, you cannot measure impact until after the fact. So how would you then be able to know its potential for impact if you didn't give it a try? Because you can't say, well, I'm going to look at this thing and I think its impact would be 30%. No, you have to do it and then see. And unfortunately, sometimes fail before you realize that was not a good attempt. So how do you know, with impact being one of the things you look for?
So that's a good question, and that brings to mind the point about data. And it's very important for any issuer that wants to issue a gender bond to have their data right, gender disaggregated data right. They need to know what is the baseline. That's where they're starting from. And what we find is that most of these institutions that have come to the markets, and we've seen this in other markets, that's Morocco and Tanzania, where we've supported bonds. These are institutions that already had banking, or should I say women lending portfolio or business. So they're able to check, I mean, based on it's not a company that just comes to the market day one and has never done anything in terms of lending to women and now wants to start and do a gender bond day one. Okay. They have a lending business to women. They understand that market. They want to scale. So they have a baseline they're starting from. So they raise the capital today on day one, but they have an obligation, again, this is a requirement for them to disclose after 1 year. How have they applied that money and what is the impact? Where is the money going? And I can give you one example, a practical example, so that just to add color to what we are saying. So, for example, in Morocco, we supported one bank. It's called Banque Centrale Populaire to issue a gender bond. It was actually the first in Africa. And so they raised about 20 million USD at the time. And, we are keen, and not just us, I mean, investors are keen. When you put your money and you've been told this is where it's going, you want to see that it's actually gone there. So what we found when we looked at their impact report after the fact is that they were able to lend. Their aim, what they had committed to do, is to lend to the underserved women, those who are unbanked, who are not really accessing credit from the banking system. So the money that was raised was on lent to their microfinance institution that on lent about 17,000 microloans. And microloans here is loans that were in the region of about 200,000 shillings. to micro enterprises. So those are small businesses, maybe employing less than 10 people, many of them in the informal sector. So really serving those women who may not have been able to get loans. And so one of the things we saw with that is, also trying to understand the demographics. Who was getting this money amongst these women? We saw that most of them, it was a fair distribution in terms of age,
right,
but most of them were youth. Most of them were in the urban centers. And there's a lot you can get from this data, just understanding which sectors and things like that. And I think that helps an issuer even kind of fine-tune the kind of product that they're offering and their impact narrative, so that I think it also applies pressure to others in that field who are trying to attract this kind of a client, for example. But I think beyond that, I think it's the overall impact of being able to be inclusive to ensure that even that micro enterprise owned by a woman or led by a woman or operating in that field is able to access funding.
It's some sort of affirmative action by the private sector, where we are saying, look, we realize that there is a huge impact on women who are not gainfully employed or women who are struggling to run and sustain businesses, and we want to support them. And we want to come up with a fund that specifically goes to address this need. Is there an expectation to the issuer, for example, when a bank is taking this bond to on-lend to small and micro businesses that are run by women, to have preferential rates for these loans that they give to the women?
So some of them actually do. Some of them do, like we saw that with NMB when we went to the field, because we actually went to speak to beneficiaries, real beneficiaries, aside from the quantitative data that we are given. And they tell us that indeed, instead of getting a loan at 19% that anyone would have gotten, they got their loan at 14%. There are arguments for and against, because, it benefits them, but I guess there are those who those who argue that it distorts the market. But I think this is an issue for every bank or every financial institution has its own model as to how they reach this kind of a client, and so that's what I'd say on that.
I just want to pick back on the how do we get the impact, and there's some theorizing in that, but I bringing it back to the SME microfinance loans kind of example, like the single largest contributor to poverty reduction is better paid work, and most people living in poverty or work for themselves or for small medium enterprises. So I think giving that support to small and medium enterprises will support the growth of an economy and will improve people's livelihoods and their incomes. And I think the point is, so that is a tried and tested model. We've seen it in many different scenarios. But currently there's a big portion of that SMEs that aren't being supported and aren't contributing to that growth, and that's our women-led SMEs. So I don't think preferential rates is a particularly thing. It's just getting the access to financing in the first place. I gave the statistic of non-performing loans. Women enterprises are better at not defaulting, so they are better customers ultimately for the bank. But on average, women they will receive loans that are only 50% of what a men's run company is. And currently, the financing gap of women companies that need money and what's out there is 42 billion in sub-Saharan Africa. So there's a huge financing gap, and the economy is missing out on a really good section of growth that's not currently getting the financing that it needs. And I think this is exactly why we want to just channel the funding to it. And I think the important thing is bringing that framework of discipline around what it means. We don't want, like as you mentioned earlier, just a tick box exercise. It needs to be very clear that this money will go to women-led. And we need to be able to track that, because the impact then will happen, because we've seen it happen elsewhere. But they just need to get the funding, and then they will kind of sort out the rest.
So what are we doing exactly? Are we bridging a gender gap? Is it just absolute altruism? Is there a business angle to it? Because no one gives money just for the heck of it.
Exactly. No, there must be a business angle, because I believe that banks, financial institutions, part of the reason why they already have like a women banking products, because they do have that. Even aside from gender bonds, we already speak to banks, financial institutions. They tell us they already have that as a business, because they can see that there's a big business opportunity in terms of lending to that particular segment that is underserved. So definitely there has to be a business case for that. And there is. I think the case is made. I think there is a business case. Otherwise, they wouldn't do it, is what I'd say. Yeah.
So as an investor in the bonds market, whether a retail investor or institutional investor, of course, the first thing I'm going for is the return. Then now when you come to this gender bond, apart from the feel-good factor, knowing that I lent money to go and have a proper impact on women in the what other benefits are there for an investor to put money in a gender bond?
Yeah, I think for me, I would say, in addition to that, I think it's beyond a feel-good factor. Because unlike any other bond I will invest in, where they do not specify where the funds are going, and this goes for gender bond, green bond, sustainability bond, I think as an investor, I know where the money is going. Like it is, you have, as an investor, I have been told by the issuer where the money is going. There's an added level of transparency. And for me as an investor, I'd rather that than my money going into a pot. And of course I've read, if I've invested and I've invested in a good company, I believe that they will make the right decisions. And many times they do anyway. But what I think is that as an investor, I'll be comfortable knowing that these funds have gone to where what has been allocated. And if it's a green bond, for example, as an investor, there's an added benefit. There's the government, for example, in Kenya has there's in law and tax benefit. So the interest income that I would get is exempt from tax. So as an investor, there's a real tangible additional benefit beyond the impact itself. Yeah.
The tax relief is only on this sustainability bonds, or is on? It's
on green bonds at the moment only, not yet on
not on gender bonds.
I was good. I see there's two other areas that investors would look at, and they are commercial. We're not asking them to do a favor. This is not charity. This is commercial, sustainable financing, and the two things are they will make better returns. So that point saying if you've got, especially in the gender world, if you've got a diverse gender portfolio, they perform better. The second one is you'll be able to raise more capital. There are the investors out there and pension funds. They want their money to do good, and the owners of pension funds, as in us, want our money to do good. So if you're an investor and you're trying to raise a fund, you want to have a green element to it. You want to have a gender element to it because you'll access kind of these responsible kind of funds out there. So I think it's in their best interest to do it. And I think that what's so great about this is it is quite win-win across the board. The hard thing is just channeling it in the right direction. And that's exactly where FSDA comes in, because it builds that framework to say, this is how it's channeled, this is how you can have confidence that it's going to go to the right places.
As is the case when there is an opportunity, because at the end of the day, when folks are listening and saying, so what exactly does this mean? Essentially, we're saying that there's funding then available for small businesses, bottom line. Right? Correct. So how do individuals, small businesses, then get to know that this is available and that this is where they need to go to be able to access?
So if I could respond to that, I mean, one of the things that we've been doing in Kenya so far, there's been no gender bond issued. And one of the things that we did recently, I think 2 weeks ago, is to launch a gender bonds toolkit to help issuers and investors understand what is this product, and if I want to issue one, how do I go about it? And that's important because awareness creation is really the first step. But beyond that, it is really for the trigger for getting these funds flowing is to get potential issuers to come to market and issue a gender bond. And I mean, I'm happy to say that in many markets, including Kenya, we've been talking to some potential issuers. And so that's the first thing. And when that happens, by the way, whenever there is a bond issuance, I think it's always very, I mean, it's a loud thing. It's we know, like, I mean, whether it's a Euro bond, infrastructure bond, or another company issuing a bond. So it will be, I mean, investors like you and I will know. But I think even as a client of that bank, I will know that there is now more money. This bank is signaling to me that they want to lend more to this underserved segment, and if I'm one of those, then I know that I also stand to benefit.
Mary, can I interject with a question there? And just for us to be, because there are many folks who don't understand when you say issue and then call to market. What does that mean? And then how do you then know that the process then is activated?
Okay. Yeah. So a gender bond, the company that would issue agenda. So when I say issue, I mean make available to the market, and that means calling investors who have the money to invest in that bond. So a gender bond issuer would issue a bond when, conditions are right, they're ready to issue the bond. So what happens is usually they'll, even in the newspapers, on TV, they advertise and they say that, we've issued this bond, this is the interest rate, we're going to raise this money and we will lend to this segment, these women-owned, women-led enterprises or other, gender empowerment objectives. So that's something that we will get to know about as investors. It's usually a public process. And when that money is raised, the company that issues, usually let's, for this discussion, talk about a bank or a financial institution that wants to raise that money. They will disclose that this money, we are not raising any other bond. We are raising money to be able to lend to women-owned, women-led enterprises, for example. So there are usually dates as to when that offer period for that issuance comes to an end. So after that period arrives, we will get to know how much they were able to raise. A lot of times, sometimes entities come to the market, they want to raise 1 billion. But because the market is very, they find the issuance attractive, the product, the bond offer attractive, the return is good, the social impact objective, they align with it, they invest even more. And that's what we've seen. They are oversubscribed, meaning you wanted to raise one, but sometimes they'll raise even more than that. So anyway, bottom line is when that money is collected, it will sit with the entity that was raising the bond, the bank, the financial institutions, in their books. But it needs to be ring-fenced. They can't now use it to pay salaries or other things. They have to use it to lend to these women-owned, women-led enterprises.
And to go to your point about how those women-led enterprises would even know about this, I think as a lender, you don't need to know any of this bond issuance, anything like that. You just go to your bank and you find that there's a new product that's a loan for women-led enterprises. You can go, great, that's for me. And I think, again, this is kind of where the win-win is. 65% of sub-Saharan African banks have got a gender strategy, and now we're giving them a tool to say, well, this is how you can actually implement it. Why don't you expand it to include this sort of thing? So I think from a user perspective, you don't need to know what's going on behind the scenes. You just need to know, I've got access to finance now.
So essentially, the money that form what we're calling the gender bond is private money.
Yes.
Okay. So it means that we have a lucrative market.
Yes, I think that's really the point, and that's an important point, because we are saying that there is money. There is money from, whether it's from pension funds, whether it's from high net worth individuals, there is money to be invested in bonds that can be channeled towards these places. And in fact, that is a really good message, because it means that for the funding that is needed for different sustainable development needs, we don't always need to look to government or to the banking sector. That's why the capital market exists. So the capital market is, complementary to the banking system. And I don't want to get into all the technicalities, but just to say that is one of the ways that capital can be raised. And this is private money, because government funding will not fund everything.
Who are your competitors when it comes to soliciting for money to fund bonds such as this one?
As an entity issuing, the one that wants to raise money?
As a business entity. Because, yes?
So, who are your competitors?
Okay, let me explain why I'm asking the question. The government of Kenya borrows externally and internally. They also say they issue bonds, or whatever paper it is that they issue. It attracts private money, pension funds, etc., etc. Now, my mind tells me that is the same money that would go to a bond similar to this one here.
Yes.
Does that then not make them a competitor?
I don't know if I would say that they are a competitor. The thing is, in any economy, there are many, it's a market. Think of it as a market. A market that you have different people, different entities coming to the market looking for capital. It can be government, it can be the private sector, and they're looking for many times, sometimes it's the same pools of capital, but again, for some of these sustainable instruments, or like gender bonds, green bonds, there's certain money that is actually interested in that particular kind of an instrument. So they may choose, those investors may choose actually maybe not to invest in the government bond and invest in this other one, for example.
It's like in the market, there are many different types of mangoes, but you've been sent to go and look for embedodo.
Dodo.
And
If you find embedodo, you'll go for embedodo. If you don't find embedodo, then you may start considering
but
others.
it's a really good kind of framing, because I'm throwing a lot of statistics out today, but there we go. But one good statistics, I gave a big number earlier about how much is needed for the Sustainable Development Goals, but the amount of financial products that have got a global sustainable investment, it's a sustainable investment initiative, is $40 trillion. It's a huge amount of pool of capital, but only 17 billion of that. So 17 billion of 40 trillion, big numbers, both of them I know, but one's much, much bigger than the other. It goes towards gender types of investment. So it's untapped. And I think this is it. You're not competing against the same investors, because some investors are looking for a very specific type of
something
instrument.
in the market. In this country, apart from banks, for example, because I've heard from Morocco and Tanzania, it's basically financial institutions that have floated the gender bonds. Who else would float a gender bond? Would issue a gender bond in Kenya?
It could be an entity that is producing goods, for example, that may benefit women. And I think I want to spotlight one particular transaction that we supported. It was a green bond.
Okay.
It was not issued to the public, meaning it was issued to a certain class of private investors, high net worth investors. But I use that as an example because I think it also had a gender impacts as well. And this is a company called Ban Manufacturing Limited, and they manufacture clean cook stoves. They are based in Kenya and have a plant here, but they they manufacture and distribute to the rest of to other countries as well. So they raised a bond to increase their capacity, their manufacturing capacity, to about 600,000 units per month. They've been doing about 400,000, so that they are able to do more and distribute to other markets. But I think when you look at the actual product that they are developing, when you look at the kind of impact that has when it comes to reducing, because these products, when you look at the data, the time taken to cook, for example, or even the energy efficiency of now using these cleaner cook stoves, it saves the people who are cooking, and it's usually in our social construct women, for example. There is issues around even health. There is respiratory benefits there, child mortality benefits there as well. So when you look at some of those impacts, it has gender impacts. I'm using this as an example just to color the picture. That could be a gender.
So a private company such as the Burn company that makes the cook stoves could also just directly go and issue a gender bond. Not necessarily having to go at a bank that issues a gender bond then to lend on to Burn. So Burn itself can go directly to the market.
Yes, correct.
Okay. They need to talk to people like you.
Yes.
To be able to know, okay, so this is how we can structure our...
Yes.
How do they reach you?
So,
as in, where do they find people like you?
Well, I'm happy to leave our contacts with you for FSD Africa, but they are also available they look at our contacts even on the website. You'll be able to get our contacts.
FSD Africa on the website. Okay.
Yeah.
Well, we've learned quite a bit about bonds, and particular this one, the gender bond. Looking forward to the first issuance of the gender bond in the market.
They must come back again. Because there are questions that still need to be answered.
Quite a bit. But thank you very much. Mary Njuguna from FSD Capital. She's FSD Africa. She's a principal specialist for capital markets. And Daniel Wilcox, who is the UK's head of economic development in Kenya, the economic counsellor at the UK High Commission. Asanteni sana for joining us today.
Thank you so much.
This is The Situation Room, the only way to start your day.